January 11th, 2024. I want to start off by saying, 80% of days are trading ranges from the open, and only 20% of the time do you get a trend from the open. And, the context today was pretty reasonable. Double top bear flag, failed breakout above the prior day's high. So it was probably reasonable to sell three. But, I think if you're taking these early sells, you're going to get caught in a lot of trading range opens and you're going to lose so much money over time. I mean, the kind of I think personally that a lot of times the people who are taking trades like selling below three are also taking trades like buying above this or selling below this and maybe buying here and losing a whole pile of money most of the days and very occasionally making money on days like this. So I personally don't trade the first 5 or 6 bars of the day because I just don't think it's a very good idea unless you're a really, really, really good trader. Additionally, 70%, so today went outside down, and 70% of outside down days close in their lower third, which also means, since patterns in the stock market are fractal, 70% of outside bars, 70% of outside down bars close in their lower third, and 70% of outside up bars close in their upper third. And you can see it remains true here: outside up, upper third, outside down, lower third, outside down, lower third. So 70% of the time that's going to be is going to be true, and 30% of the time, like today, it's not going to be true. And one of the hints I thought that it would today was probably not going to hold in that lower third was how strong how quickly we got outside down. I mean, we were outside down within 9 bars. And if you think about it, how much did we sell off early in the day? We sold off 40 points in the first 9 bars of the day. And if the selling were to continue being this strong, we would lose like 400 points today. And, have you ever seen that happen? You probably not. I mean, the odds of just losing that ridiculous amount are just very, very, very low. And so you have to be expecting that we're probably going to end up going sideways at some point rather than, if you're selling down here, it's technically okay, but these are humongous parabolic bars. And do you think we're going to, I guess I would say my point is, do you think that we're going to sell off all the way down here before we get a pullback? Probably not. So especially when you get bad follow through on a bar like bar 9, I think it makes more sense to just take profits. And that's why you can see traders sold below 8, hoping to get a collapse, didn't get it on 9, exited around break even, causing 10. Anyways, bar 1, a bull bar closing near its high. A breakout of yesterday's high, but doesn't close very strong, and probably more likely sellers not far above. You're also at the top of an overall trading range, so you have to be thinking probably sellers pretty soon. I mentioned additionally, I thought that since on the daily chart we'd had a couple of good bull closes, that today would be something disappointing for the bulls, and it was. This is a disappointing bar for the bulls. It's not what they wanted to see. They were hoping to get another good bull bar, and instead you get a very, very deep pullback, maybe to 50% correction of this. Pretty much exactly 50% correction of the bull move. And that's where you end up getting the reversal. So that was a reasonable magnet. 2, like I said, it's a double top bear flag with this. I don't think I would sell it. I personally just wait. It's just a tight trading range to me. Bear bar on 3, so good follow through for the bears who sold below 2, and then a big bear bar on 4. 4 is a bit climactic, so we're probably going to pull back pretty soon. And I thought, while it was okay to sell, you have a magnet right here. And that the bears who sold this close are disappointed in this, and they're going to try and get out around break even. So that's why you get this bounce here. And I thought, there was a pretty real chance that we got a deep pullback. If this was a trading range open, I was expecting a deeper pullback than the bears wanted, and I was expecting something like a 50% pullback. And we didn't end up getting it today, obviously, but I thought that was a legitimate possibility. So bad follow through on 5 for the bears, and some of them will just get out at the market, and that causes 6. But bad buy above 6 after such a strong move down. And then you get a surprise outside down. And what happened was the bears, they got out above here or above 6, and then were surprised by how strong 7 started to become. And they panicked, quickly getting back into their shorts. And that's why 7 was so big. Another huge follow through bar on 8. And are these good bars for the bears? Yeah, they're great bars for the bears. We might get a measured move down to this. We might get a measured move down to this. We don't know. But I think, when you see this, I think what should be running through your head is we have sold off, at this point, 38 points in 8 bars. Do you think today is going to be, a 275 point day to the downside? No, we've had days that are 30 and 40 range recently, and this might be a bigger day, but do you think it's even going to double in size when you're right here? Do you even think that we're going to get like a 70 or 80 point day? It's so you have to be thinking about that when you see how huge these bars are and realize that there's probably going to be some profit taking pretty soon. Like I mentioned, disappointing follow through 9, and then a big bull bar on 10 closing near its high. And 10 is caused by bears buying back shorts, but it's a really strong close. So I would say it makes sense to exit above 10 at the latest. And bad follow through on 11. You can see because most of the bears, they got out during 10. They didn't wait to exit above 10. They got out during 10. And that's what made it so big. 12, a second leg up. 10 was big enough for a second leg up, and 12 could be that second leg up. And then you get a giant reversal down on 13. I think 13 is too big of a bar to sell. But any bulls who are long for any reason are going to be getting out below 13. And so what bulls do is they buy the close, and that causes 14. But are you really, do you really want to buy here? It's a third push up, and you're probably buying high. I think the target for the bulls is at the top of the most recent sell climax, which is the 5 high, or it's this low. I thought it was something else you have to keep in mind, right? Once you see 15, you have to be thinking this is probably a trading range. Sometimes when you get a trading range, so like the trading range starts on bar 10, sometimes it breaks below the bottom of the trading range and goes for a measured move down of the trading range, but the trading range still starts here. It's just bigger and expands to the downside. So you have to keep that in mind that happens sometimes. But we did keep the gap open here, and we had another gap open with the 1 low and the 7 high. And you can see later in the day, once you start getting this, you have to be thinking this is probably a trading range day, right? Because if we're getting such a strong rally, it's probably going to be a trading range day. Let's say by bar 45, do you think this is a strong bear trend day? Or does this look more like a trading range day? Is it a strong bear trend day? Or so we'll start with, is it a strong bull trend day today? No. Is it a strong bear trend day today? This is a pretty good rally. So until bears, can give me some proof that they're going to get another leg down, it's probably not a strong bear trend day either, which means it's probably a trading range day. And what happens to gaps in trading range days? Gaps close. And you can see the 1 low where bulls bought and got trapped. If they scaled in lower, they were able to get out of that first entry around break even with profit on their second entry right at 66. So that's what the target was of this rally, was this 1 low. And on trading range days, you should look for early gaps, or on days you might suspect to be trading range days. Once you start to get a rally, you should look where the open gaps are and look to exit in that area. But we have 2 open gaps at this point. So some traders are thinking that this could last all day. But you also have to be looking at, why is 10 such a strong close? Why is 12 such a strong bull close? Why is 14 such a strong bull close? We're getting oddly strong bull closes for something that you want to last all day. And with how climactic it is in general, it's probably not going to. Bear bar on 16, you could say the sell is below 15. You could argue, it's a low too short, or you could say wedge. Either one's probably fine. Follow through on 17. I think once you get 17, it's back to sell the close. But with how strong the bull bars have been here, you need to be really wary selling this close. I think it's okay to do, but you could be selling low in a trading range. It's reasonable to do it for a swing and hope we're going to get something like this. But I think if you're selling that close of 17, you're just getting out above really any bull bar, or potentially any bar, but I would say any bull bar. So I would, you're selling close 17, you probably have a stop up here or a couple points above 17, and you're just waiting for a bull bar, and then you're going to get out above it. And I think when you see 21, it feels like kind of a gift. You made your 10 points. So I would take a piece off at 10 points. Same thing here, right? If you're selling down here, I think it makes a lot of sense to just take a piece off at 10 points, knowing that this probably isn't just going to be, the biggest collapse in stock market history. That's pretty unlikely. If you make that bet, that we're going to have the biggest collapse ever, so you're only going to be right once or twice in your life. So I think that, taking a piece off at 10 points makes sense here. You can exit the rest a couple points above 9, sell below 17, pick a piece off at 10 points, exit the rest above 22. But anyways, bad follow through 18, kind of bad follow through 19. Okay to be short. This is spike channel. Then inside bar on 20. Okay to take the sell below 20 and just probably put a stop above 18, the top of the channel, and you're out good above any bull bar anyways. And then you get a big collapse down on 21. Now, what does this look like to you at this point? 1, pullback, 2, pullback, 3, consecutive sell climaxes. And when you get consecutive sell climaxes, a lot of times you can get, pretty strong reversals. I'll pull up my folder. I have a few examples. So, consecutive sell climaxes. And, this is today, or this is a couple months ago. You see consecutive climaxes and then a reversal down. This was today, consecutive buy climaxes and then sideways. And then we got consecutive sell climaxes at the end of the day here. Usually, I think that when, in general, a lot of low probability things happen today, I think. When you get such a strong move down, 60% of the time, the market's just going to go sideways. 20% of the time, you're going to get a move down all day of some kind. And 20% of the time, you're going to get a reversal up. So I thought it was, in general, lower probability, the reversal that we got today. But once you started to get a tight channel, I thought this open gap right here was key. When you broke above the 33 high and you trapped those bears in and you started to trade up and you never really let them out. And realistically, if you sold above the 42 high, you were never let out there either. This is the breakout point. But, and you could argue that bears had a chance to get out 44. That's true if you sold above the breakout point. But realistically, selling above 42, sure, those traders are trapped and they never got out at break even. So I thought that was important as well. But anyways, giant sell off on 21, traders exiting at the market causing 22. I think traders will flatten above 22. So that's probably responsible for the bounce on 23, but no one really left to sell once you get a strong close on 23. Low one on 24, but you already have consecutive sell climaxes. This is a really small bar. Not really sure how much is left to this. Follow through for the bears on 25, and then you can see 26 traded above 25 and then back below. So outside down, closing in its lower third. But I think this makes this one pull back two. So 2 legs down essentially to 26, and that's a problem. So this could be a second leg trap, bad follow through 27, and a big reversal bar on 28. Once you get 28, you should probably be thinking that we're probably going mostly sideways at this point, you would think. Are you going to exit above 28? Yes. Are you going to buy above 28? Probably not. I think we're still going to we have to go more sideways first. This is a really big sell-off, and the bears did a lot of damage, so we probably have to go more sideways before we can go up. Bad follow-through on 29 and 30, obviously. If you're buying here, you have to be willing to scale in a lot lower. It's a pretty wide stop. Bull bar 31, but I think we need to get a close or two above the moving average before we look to do anything. Follow-through for the bulls on 32 and 33, but we're right at the moving average. Disappointment 34. Reversal attempt up on 35, but a weak close. Could be a couple pushes up. And then traps traders in on 36 and closes near its low. Some bears would be looking to sell below 36, citing that we're now in a broad bear channel. And that was a wedge pullback, and they want to get somewhere, maybe down at the channel line, maybe a measured move down of this. And the bulls want the opposite. The bulls want a breakout above the high of the wedge and to swing up. And once you got something else that I thought was interesting, and, top of one of the most recent sell climaxes was, I would say, the 15, the 16 high essentially. And I thought that was going to be an important magnet, since I thought, like I mentioned earlier, since these bull bars were so strong that the trading range probably started in here. And if the trading range probably started in here, we could easily test back up to the top of it. So I thought that this was going to be an important magnet area, and the measured move up is in the same area. So I was thinking that here is, for the most part, going to be, there'll probably be resistance. And there was. You can see we started to go more sideways. We just ended up getting the breakout up again and closing the gaps. So 37, it's a high 2 for the bulls. Bears hoping that essentially breakout pullback from 36, and we're going to start running up the way down. But disappointing if you sold to close at 36 to see 37. You can see as we traded down on 38, those traders just bought back their shorts around break even. And they even took a small loss. And then you got 38 closing near its high. I wouldn't personally buy. I think it's probably okay to buy above 38, but I wouldn't personally do it because we haven't had a close above the moving average yet. And I want to see a strong close above the moving average. And that's kind of what you get on 39. So buy the close 39, follow through 40, 41. You can see some bulls bought the close at 39, took their 5-point scalp. 42 is from those bulls scalping out potentially 5 points. It could be the top of this channel too, right? So spike and then channel, and we touch the top of that channel. So that could be part of the reason we're finding sellers at the 41 high, as well as the fact that it's a 5-point scalp for the bulls who bought 39. So disappointment 42, but 42 never able to touch the 33 high, so still an open gap. And then you get a surprise up on 43. So now bulls move their stop to below 42, and we have an open gap, and they're thinking this could go for a while. This is starting to become a pretty tight channel, and we should at least get up to here. Disappointment 44, but channels will often be disappointing, and they'll just continue to slowly grind higher. Follow through 45, 46, 47 for the bulls, but small kind of disappointing bars. I think you can probably buy the close at any of these bars, and just as long as you're using the correct stop, it's okay to enter at the market. Bear bar 48, but 5 consecutive bull closes. 2 dojis, but 5 consecutive bull closes, so not all that great to take any sort of sell below 48. Disappointment 49. Follow through for the bulls 50, 51. Probably buyers below 51 you can see during 52, and then a reversal up for the bulls on 53. And, we got to this high here. I actually wrote down in my notes that I thought if I had bought anywhere down here, I probably would have scalped out of most of it up here or just gotten out of most of it. I thought buying the close 39 was a pretty strong trade. But, I think I would have probably taken maybe a piece off at 5 points somewhere up here and then held the rest for something up here and potentially just gotten out. But if you're just holding as always in, I think it's okay to hold until you get 58 and you have to get out below 58. But anyways, 53, 54, a breakout above for the bulls. And now you're hoping for this measured move. But, that's really far away. It's towards the high of the day. It seems unrealistic at this moment in time, or just low probability. But you do have to start looking, I made the mistake of not looking for the open gaps. And again, open gaps close, especially in trading ranges. So you probably got to be expecting that at a certain point. 54, big bull bar, but probably going to get disappointing follow through, which you do on 55. And we just closed one of the gaps, so we're probably going to retest it like we do on 56. 56 closes disappointingly strong for the bulls. Bulls will exit below, but the rest of the bulls bought the close of 56, didn't let it trigger 57. But 57 is a high one. High one triggers above 56, and it's an entry bar on 57. Not all that great. Disappointment 58. Exit below 58. Are you taking this sell? No. I mean, we're in a tight bull channel. When was the last time bears made money on a stop order? 24. So, 30 plus bars ago. So you really want to take the sell below 58? Probably not. And that's why you get disappointment on 59. A lot of traders, if you're the only traders who are selling this are probably algorithms. And if they're taking it, I mean, they're looking for a really fast move down. And the moment they don't get it at 59, they're buying back their shorts immediately on 60. And that's what causes such a rally. Bad follow through 61, because no one wants to buy above 60, high in a potential trading range. And inside bar 62, failed breakout above 63, and an attempted breakout below the inside bar. It's essentially a triangle on a lower time frame. But again, same problem with 58. No bears are making money pretty much ever, and it's a type bull channel. I'd rather wait. Buyers below 63 and reversal up on 64. Follow through for the bulls 65, 66, but this is very climactic. At this point, I don't think I would be long for this. I probably would have gotten out of everything below 58. You can maybe buy again, but it just never seems all that good. You probably have to get out below 63. And if you're just really dedicated, you can buy again above 64, but you're probably getting out a couple points below 66. So I don't think there was really that much money to be made towards the end of this channel. But you can see, if you were really smart and you bought above 64, you would probably think that we're going to, once we hit the one low, we're going to find a lot of sellers, and you could just get out there with your 5 points, essentially. 64 was a reasonable buy. And, it just so happens that the one low is around a 5 point scalp. So not that surprising. And I say just so happens sarcastically, because nothing is random in the stock market. That was all put there to make this a reasonable buy. So again, tons of traders looking to exit at that one low, and that's causing the big sell off on 67, follow through on 68, doji on 69, but this is probably strong enough for a second leg. This is a trading range though, so this reversal is probably minor. You can see it was second leg down 70. Bad follow through 71, and then you get 72. It's a low one short in, a bear channel, but you're selling right on the moving average. This probably isn't going much lower. I think it makes more sense to just be flat. Bad follow through 73, but this is probably just a couple legs up as well. We're just in a tight trading range at this point. And then I wouldn't do anything for the rest of the day. For stop orders today, I think you theoretically could have sold 3, but I just personally do not trade that early in the day. 4 probably okay as well. You could sell 7, but I think if you're selling here, you get 10 points. You definitely take a piece off and then exit the rest above a point or two above 9. You could sell, I guess you could theoretically sell 8, but you're probably going to have to sit through a pretty, difficult pullback. I mean, if you sell the close at 8 and you don't get out during 9, you're kind of signing up for 10. So it's kind of hard to, I don't think getting out here is the best idea if you're short through here, but you kind of have to. So again, that's why selling here isn't ideal. Sell below 17. You could probably sell 20 as well and just scalp out the close 21. I think, I'm not super positive about 38. You can probably do it, but I think it just makes way more sense and with much better probability to buy the close at 39, looking for the measured move up in this high. And then you could probably buy the close of any of these bars just using the correct stop. Since once you see it's a tight bull channel, you can probably just start buying closes of certain bars, and you get a lot of follow through. Exit below 58, another leg up, and yeah, that's pretty much it for that. On the daily chart, like I said, 50% pullback. Not all that surprising. We're in a trading range. Bulls are willing to buy the 50% pullback, and they're looking for another leg up as well. you could see it say that it's one pullback, two pullback, and then we're going to get a third leg up. I think that's possible. On the weekly chart, tomorrow is Friday. Bulls want as strong a close as possible. Bears want to make the market sell off. I don't know if the midpoint of the week is too far. 47.85. No, it's not too far. So, the midpoint of the week is 47.85.25. Essentially, it's probably not exactly that because it's hard to get the exact things on this. But essentially, 47.85 is the midpoint of the week, and the Bears want to make the market close below the midpoint of the week, and the Bulls want to make the market close on its high. So I'd pay a lot of attention to the high of the week tomorrow and the midpoint of the week, as those are going to be important prices. And yeah, that's the day.